Good evening, my dear students. Welcome to today's session, which is the second session for chapter number 11, which is audit report. And I expect that whatever was given to you as homework, that is, you were supposed to read your ICAI module, whatever we have done so far, along with the illustrations. I hope you all have done that. And in case you have any query, you can just send me your queries. I'll take them up at the end of the session, right? So I'll quickly start with today's session because there are many topics that we need to complete. So what we were doing the basic elements of the auditor's report. See, I'll revise the entire essay once I'm done with this essay. So we are doing essay 700, and we know that the name of the essay is forming an opinion and reporting on the financial statement. So with respect to the forming of the opinion, you have seen, and now we are considering what are the basic elements of an auditor's report, right? And whereby in the last session, we have already gone through title. We saw that the title Independence Auditor's Report. The word independent distinguishes the auditor's report in terms of standards on auditing from the other auditing reports. Then addressee, that is to the shareholders of the company or to the partners of the partnership firm. That means to whom it is addressed. Auditor's opinion, we saw it will consist of two paragraphs. One is introductory section and then is the opinion. And here we are talking about unmodified opinion. Then the basis, where we saw auditor will mention four things, right? So what were the four things? That the audit was based on essay. Then auditor will mention, give a reference to the auditor's responsibility. Then auditor will tell that he is independent and fulfilled all the ethical requirements. And last but not the least, in case of unmodified opinion, auditor will mention that he has obtained the sufficient and appropriate audit evidence in support of the opinion, right? So going concern and key audit matters, essay 570, essay 701, I'll be taking up later on. Then we have done responsibilities of management on financial statement. And I told you why we as an auditor, we are supposed to mention this, because we want to tell the users of the financial statement that, see, we have not prepared the financial statement. Financial statements have been prepared by the management. That is the premise on which we are conducting the audit. The internal control have been implemented, designed by the management, and it is the responsibility of the management to assess the going concern ability of the entity. So that was regarding the responsibilities for the financial statement. And today a very important topic, which is auditor's responsibility. I'll be starting with this. In fact, we left these three topics in our last session: the location of description, other reporting responsibilities, signature, place, and date we have discussed, and these are very simple. And I am starting today's session, like today's topic, and I'm expecting that the homework, the reading part, the reading of illustrations, everything has been done by you all, right? So Anushka is saying, yes, ma'am, I have done the homework. Good. Right. So with respect to auditor's responsibility, why SS 700 gives one of the element as auditor's responsibility. See, the way there was a paragraph with respect to management's responsibility, what was the purpose? The purpose was to tell the users of the audited financial statements and the audited report that we as auditors, we are not responsible for preparation of financial statements. We are not responsible for maintenance of internal control. And as such, we are not responsible for assessing the entity's ability to continue as going concern. Yes, we will consider the management's appropriateness of use of going concern, right? But the primary responsibility lies with the management, right? Now, when we are telling the auditor's responsibility, if you see, the name of the paragraph is auditor's responsibilities for the audit of the financial statement. So by mentioning the word audit, we are first of all specifying here that we are responsible for conducting the audit of the financial statement, right? So first and foremost, let me just take you to the paragraph in the module. See, it says, auditor's responsibility for the audit of the financial statement. The heading of this paragraph automatically tells the users of the financial statement that, see, users of the financial statement, auditor is responsible for conducting the audit of the financial statements, right? And students, as per SA 700, these auditors' responsibilities, basically these are divided into 3 sections. All the 3 sections, if you remember, when I started my first session of this chapter, I have revised all the essays number. And I told you that you will get to know why we are revising our earlier concepts. Because here, we will be telling the users of the financial statement that, see, we as auditors, we are responsible for conducting the audit of the financial statements, and whatever were our responsibilities as per various essays, we have complied with those responsibilities, right? See, our responsibilities with respect to conduct of audit and how to conduct an audit has been given in the various provisions are given by various essays. So we want to tell the users of the financial statement that, see, we have complied with all the responsibilities which are given in the essays, right? So what are those responsibilities? So I've already made a summary of the auditor's responsibility for the audit of the financial statement, and I want 100% attention of you all on the screen. So, see, auditor's responsibility for the audit of the financial statement, right? So, first of all, in the first section, we are telling the users of the financial statement that whatever objective we have with respect to the audit of the financial statement, we have fulfilled that objective. And students quickly send me the replies, what is the objective when we conduct the audit of the financial statements? I'm waiting for your replies. What is the objective? So first and foremost, whatever objective is given, why we have conducted the audit, we have fulfilled that objective. This is our first responsibility, that whatever we were supposed to do, see, we have done that. So what we as an auditor are supposed to do when we are conducting an audit? So we are supposed to obtain a reasonable assurance. Now go back to SA 200, not absolute, a reasonable assurance that the financial statements are free from material misstatement. And after obtaining a reasonable assurance, we need to express our opinion. We need to give an auditor's report. So we will say our responsibility is to obtain the reasonable assurance and to express that opinion clearly through an auditor's report, right? And when we are saying that our objective is to obtain reasonable assurance, then SA 700 requires the auditor to specifically tell the users that what is meant by reasonable assurance. And when we are saying reasonable assurance that the financial statements are free from material misstatement, SA 700 also want us to give the users of the financial statement what is meant by material. Why? Because we as an auditor, we know what is reasonable assurance, what is material, right? We have done SA 320. We have done SA 200, but the users of the financial statement, they might not be aware. So let us just look at this point. So what is the first section? Yes, the answers are absolutely correct. Vanshika, Kamal, Abhishek, Riya, Anushka, everyone is correct, right? So this is the first part which says we will tell the users of the financial statement that to fulfill the objective why we are conducting our audit is one of our auditor's responsibility, and the objective is to obtain a reasonable assurance that whether the financial statement are free from material misstatement. And having obtained the reasonable assurance, we will issue an audit report. And as I told you that SA 700 requires us to tell the users specifically as to what is meant by reasonable assurance. So what is reasonable assurance? Is it absolute assurance? No. Yes, it is a high level of assurance, but it is not a guarantee at all that all the material misstatement will be detected. So we are telling the users of the financial statement that, see, we are following all the essays, right? But there is a possibility that a material misstatement, whether due to fraud or error, it may remain undetected. Why? Because this is an audit, not an investigation, and we are only obtaining the reasonable assurance. And what is meant by material, you all know, you all have done SA 320. So anything which is given to be material by the applicable FRA, first of all, that is called material. Or if it is not defined, then anything which has an impact, which can affect the decisions of the economic decisions of the users of the financial statement. Example, the decision of the shareholders, whether to buy, sell or hold the shares, right? So very simple to learn also. And first point is very, very simple. We are telling the users of the financial statement that our responsibility is to fulfill the objective. And what is the objective? To obtain reasonable assurance whether financial statements are free from material misstatement, and then to issue an auditor's report. And SA 700 says that the users of the financial statement may not be aware now. So please tell them what is meant by reasonable assurance and what is meant by the term material. So when we define reasonable assurance, it means a high level of assurance. That is, it is not a guarantee that the misstatement will always be detected, right? And what is meant by material, if given by FRF, or if it is expected to influence the economic decisions of the users of the financial statement. So quickly, I need replies whether section 1 of the auditor's responsibility, which is just a recap of what you have already done, right? See, why did we performed all the audit procedure? Why did the management engage us to conduct the audit? Because the end result is auditor's report, right? So whatever responsibilities during the audit, we fulfill those. We'll be mentioning them in the auditor's report, that during the course of audit, when we were conducting the audit, we have fulfilled all those responsibilities. So we are telling that we started with our first aim was to fulfill the objective, which is to obtain a reasonable assurance and to issue our audit report. Clear? So is there any doubt with respect to the first section? I told you it is divided into 3 sections. First we have done, and this is very important from the point of view of your exams also. So the second section, I will give you time to take the screenshots. So first of all, just listen to whatever I'm saying. So the second section. Now, in the very first chapter, you have already read that it is the responsibility of the auditor to exercise professional skepticism, to apply professional judgment all the time. So when we have fulfilled this responsibility, we'll be telling this to the users now. So the second section, first point is that we have fulfilled our responsibility of applying professional skepticism and professional judgment all the time. Any doubt? No. Why? Because this we have seen from the very first chapter, that we need to apply professional skepticism and we need to form certain professional judgments while we are conducting the audit, right? Now, secondly, come back to chapter number 2 now. While you were identifying and assessing the risk of material misstatement, through understanding the entity and its environment, under SA 315, what were you doing? You were again fulfilling one of the responsibilities mentioned in SA 315. So my first point was that I applied professional skepticism and professional judgment. And second is, see the users of financial statement. I identified and assessed the risk of material misstatement in terms of what? SA 315. This is just a sequence. Second, after identifying and assessing the risk of material misstatement, auditor, he makes the responses to those assessed risk. SA 313. So we will tell the users of financial statement that we have considered various audit procedure in order as responsive to the assessed risk. Clear? Then come to audit evidence. We will tell the users of financial statement whatever audit evidences we have obtained are sufficient and appropriate in terms of SA 500. Clear? And we will also tell the users of financial statement that, see, as per SA 240, the risk that the misstatement on account of fraud is high, may remain undetected, is higher vis-a-vis the risk that a misstatement on account of error remains undetected. This you have done in SA 240. So you can see whatever were the responsibilities of the respective essays, we are telling the users of the financial statement that, see, we have done all these things. Clear? This was the first point, right? Then second, you have done Companies Act section 143 subsection 3 clause 1 with respect to internal financial controls. So we'll be telling the users of the financial statement that, see, users of the financial statement, it was our responsibility to understand the internal controls that we have done. Clear? Clear? Then third, to understand the accounting policies and accounting estimates. If you remember, I told you auditing of accounting estimates is covered by SA 540. So now we'll be telling that we have fulfilled. We were responsible for doing that also, which has been done. Then I told you that primary responsibility for assessing the entity's ability to continue as a going concern is that of the management, which we have written in the earlier paragraph. But now, to conclude the appropriateness of management's use of going concern is our responsibility in terms of SA 570. So we'll be telling the users of the financial statement that, see, we have done that also, right? Then we will be telling the users of financial statement that in case of the audits of branch, audit of components where SA 600 is applicable, whatever was our responsibility, we'll be mentioning that also. Clear? It might look that there are a number of points, but when you start linking it, when you start summarizing it, you will see that whatever you have done so far and wherever you feel this was our responsibility, we are telling the users of financial statement that this was our responsibility. Preparation of financial statement, internal control, assessing going concern was management's responsibility, which we have mentioned in earlier paragraph. And what is auditor's responsibility is mentioned here. So let us just have a quick at the summary, which I have already prepared. See. So just a minute. So when we started our audit, SA 200, now I hope this is clear why I revised all the essays when I started this session. The last session for auditor's report. So we said that professional skepticism and judgment has been applied. This is our responsibility. So what is the language which is written? Let me just tell you one point, then I'll take you through the module. The auditor shall state that as part of the audit in accordance with essays, the auditor exercises professional judgment and maintains professional skepticism throughout the audit. Okay. Then to identify and assess the risk of material misstatement in terms of SA 315, to have those responses, that is to design those responses, SA 330, to obtain sufficient appropriate audit evidence, SA 500. See, these, why I have mentioned all these essays, so that you are able to, learn it, right? Then we will tell the users of financial statement that, yes, it is our responsibility to detect the misstatement, but the risk that any misstatement arising out of fraud remain undetected is higher vis-a-vis the risk that any misstatement with respect to error remains undetected, right? Then understanding of the internal control, section 143(3) subsection clause 1. Accounting policies estimates are given in SA 540, that is why I mentioned it. Going concern is 570. Then we will tell them that with respect to the fair presentation framework, it is our responsibility to see whether overall presentation structure and content of the financial statement is maintained or not. And with respect to SA 600, where the branches and components have been audited by other auditors, the division of the responsibility will be given, like who is responsible for whom, right? What is the exact language? I'll just take you through the module, but I hope this second part is also clear as to what we are trying to tell the users of the financial statement, right? Thereafter, we will be telling the users of financial statement in the third section that, see, whatever we have done, whatever we are going to report, whatever we have reported, and whatever were the significant findings or the scope and timing of our audit now, we have discussed that with those charged with governance in terms of SA 260, communication with those charged with governance. So we have done that, we have fulfilled that responsibility. We were responsible. You will see when we'll be discussing about the various modified opinion, you will see that whatever are the wordings of the modified opinion, whatever is the reasons for a modification, the auditor is supposed to discuss those wordings and those reasons with those charged with governance. And whatever are the significant findings, the auditor will discuss them with those charged with governance. So we are telling the users that we, under SA 260, we have fulfilled that. Then in case of any deficiencies in the internal control, those are also to be communicated to those charged with governance and management as per SA 265, and we have done that. Then in case of listed companies, more specifically, it is required in terms of SA 200 that you need to be independent. See, this is auditor's responsibility now. Management will not come and keep on checking whether you are independent or not. This is my responsibility as an auditor, that I remain independent throughout the audit and the ethical requirements are met. So we will mention that. And last, we will be doing SA 701 with respect to key audit matters. So we will be telling the users of financial statement with respect to the listed entities. See, KAM is more is compulsory, mandatory with respect to listed entities. Rest, it depends upon auditor's professional judgment. I'll take you through SA 701, then we'll discuss in detail. So there we'll write that, see, we have fulfilled our responsibility of discussing the matters with those charged with governance as required by SA 701 and reporting them in the financial statement. Let me just take you through the summary that I have made. So what is the third section? It says that we have communicated with those charged with governance in terms of SA 260. In case of any deficiencies in internal control, the same have been communicated to those charged with governance and management. Why we are telling this to the users? Because we know this is our responsibility. Now, management will not come to us and ask, what is the deficiency in internal control? We will write it in our financial statement. No. But it is our responsibility to discuss the same with the management and those charged with governance. And with respect to listed entities, in terms of SA 200, whether we remain independent and ethically all the requirements are met, and whether the responsibilities given in SA 701 has been fulfilled or not. Now, let us just have a look as to what is given in your module. And students, whatever is mentioned in the module, the same language, I'll share you the practical audit report, which we were looking at in the last session. We'll find that this is exactly the same language which is actually used in the audit reports. So what is that? So auditor's responsibility for the audit. So I told you that this term audit here specifies that we are responsible for conducting the audit only. So I told you there are 3 sections. So let us discuss first section. This section state the auditor's responsibility with respect to objectives, And I told you objective is to obtain reasonable assurance and financial statement are free from material misstatement. And SS 700 wants us to tell the users what is meant by reasonable and what is meant by misstatement, material misstatement. So the objective is to obtain reasonable assurance whether the financial statement are free from material misstatement, and it can be through fraud and error, and to issue an auditor's report. Now, these 2 points are coming from this only, that reasonable assurance is high level of assurance and it is not a guarantee that an audit conducted in accordance with SA will always detect a material misstatement when it exists. So you can get a true false, that the audit conducted in accordance with SA is a guarantee that a material misstatement will always get detected, whether due to fraud and error. So this is a false statement, right? And what is meant by material misstatement can always arise. Either you need to describe material that is expected to influence the economic decision of users, or whatever is given as per the applicable FRF. So with this, we have done our first section, and this diagram beautifully explains the entire auditor's responsibility. Okay? Here we are telling what is material, and we are telling it can be as per FRF or whatever has an effect on the decisions of the users of the financial statement. And for all those who were asking me, ma'am, how to make summaries, these are the way you can make the summaries. Okay? Second part, this is what the second section. The auditor's report for the audit of financial statement of section of auditor's report shall further. So, exercise profession. Let me just take you through these points first. State that as part of audit in accordance with SA, the auditor exercises professional judgment and professional skepticism. Then C, to identify and assess the risk of material misstatement, SA 315. To design and perform audit procedure responsive to those, SA 330. To obtain audit evidence, SA 500. The risk of not detecting a material misstatement resulting from fraud is higher than for resulting from error, SA 240. Clear? Then internal control. And what is the language? To obtain an understanding. This is our responsibility. To evaluate the appropriateness of accounting policies and reasonableness of accounting estimates, SA 540. Then to conclude on the appropriateness of management's use of going concern, this is what SA 570. And where the financial statement are prepared as per fair presentation, whether the overall PSC, presentation structure and content, is correct or not, whether it achieves fair presentation. And last but not the least, with respect to SA 600, see, SA 600 is using the work of another auditor. So where the components, divisions or branches, subsidiaries are audited by other auditors. So what is the responsibility of the auditor? So see, when SA 600 applies, further describe the auditor's responsibility in a group audit engagement by stating the division of responsibility. As to what is the division of responsibility, right? By indicating the extent to which the financial information of components is audited by others and that you have considered in your main auditor's report, right? Then is the third part. It shall also state that auditor communicates with those charged with governance, SA 260. What all will the auditor communicate? Planned scope, timing of the audit and significant audit findings, including any significant deficiencies in internal control, that is SA 265. Then for the audit of listed entities, state that here the auditor is stating that we, in terms of SA 200, we have given a statement to those charged with governance that we have complied with the relevant ethical requirement, including independence. And for the audit of listed entities, the auditor will state that the requirements of SA 701 with respect to key audit matters have been fulfilled. What are key audit matters we'll be doing later on. Now, let me just quickly show you how this will come in an audit report. So see, so this is, see, auditor's responsibility for the audit. clearly mentioning audit of financial statement. So see how clearly it is mentioned. This is the first section. Our objective is to obtain reasonable assurance, whether free from material misstatement, and to issue an auditor's report. What is reasonable assurance? We are giving misstatement, how misstatements are considered, expected to influence the economic decision, right? Then we are telling that we have applied professional skepticism, judgment, and see SA 315, everything is same. Risk of not detecting misstatement, internal control, right? Then operating the obtain an information understanding of internal financial control relevant to the auditor in terms of section 143 subsection 3 clause I of the act. Then we are telling them that appropriateness of accounting policies and reasonable. Evaluate the appropriateness of policies, accounting policies and reasonableness. Conclude on the appropriateness of management's use of going concern. See, we are using the same language as has been given. Then with respect to what? Overall presentation structure in case of fair presentation. Then we are telling that we have, just a minute, we are responsible for, just a minute. We have communicated with those charged with governance, SA 260. And with respect to any deficiencies, also we have communicated. Then independence, ethical requirements, and last is with respect to your key audit matters. Where is it mentioned? Most significant. Determine what matters are most significant, and you will see those matters are called key audit matters. So this was all about the responsibilities of the auditor. See students, this may appear to you like a lengthy topic, but if you just visualize the summary, let me just show the summary to all of you again, and all of those students who want to take a screenshot can do that. I'll just minimize. See, first is what? Objective. From objectives line, that is reasonable assurance and material misstatement, two more points are coming. Then second is just start from the very beginning. Professional skepticism, judgment, 315, 330, 500, 240. I'm telling what the SS numbers. Then 143, clause 1. Then SA 540, 570 and overall presentation, and SA 600. And then the third section is with respect to what? Communications to those charged with governance in case of deficiencies, and that we are independent, met ethical requirements because we are responsible for that, and then that we have communicated the key audit matters. So I hope with this, the auditor's responsibility paragraph, which is very important from your examination point of view also, is clear. So quickly send me any like the queries if you have, or quickly tell me whether it is clear or not. So I don't find any query with respect to this. So now let me just take you through the next point. Now students, when you have seen that the auditor's responsibility is consisting of 3 parts, it is quite lengthy. So if I ask you what will be the location of the auditor's responsibility paragraph. So the essay says that there are 3 options. The auditor may include these auditors' responsibility within the body of the audit report. That within the body, like after your management's responsibility, you have the auditor's responsibility, and everything is coming there only within the body, right, of the auditor's report. Second option is, if you find it lengthy, you can do one thing. If the auditor feels that I don't want to make it bulky, the auditor may make an annexure or appendix, may attach it to the auditor's report, and under the auditor's responsibility, the auditor may give a reference to that appendix or annexure. Clear? Second, simple. Third, it says that the auditor may give a reference to any website, appropriate website, whereby all such responsibilities are written. In the auditor's responsibility paragraph, just give a reference. Simple. So let me just take you through the module. and generally it is always found within the body of the audit report. And this question came in July 2021 as a true false. The question was that the auditor's responsibilities can be written only in the body of the auditor's report. So answer was false. Why? Because these options are also available. So what is it? The description of auditor's responsibility for the audit of financial statement shall be included within the body of the auditor's report. Simple. In the form an appendix to the auditor's report, in which case the auditor's report shall include a reference to the location. So in the auditor's responsibility paragraph, the auditor will mention that on page number so and so, appendix or annexure so and so, this is written. Okay. Then by specific reference within the auditor's report to the location of a description on a website of an appropriate body where law, regulation or national account auditing standards expressly permit to do so. So I told you that generally this happens, that is within the body. So now let's just have a look. See, auditor's responsibility, and here auditor is telling that reasonable assurance and everything, and see how reference can be given. A further description to our responsibilities of the financial statement is included in appendix so and so of auditor's report. This description is located at, now indicate the page number or give the location, and this forms a part of our audit report. So clear? Clear? Simple topic. And Abhishek, who was saying this, if the Kavya is saying, ma'am, if the auditor fails to mention any of the point of the auditor's report, see students, these points are the standard formats, and like we have seen the actual audit report also, and you will see these are the set formats which are followed by all the auditors across the country. So they and these are given in SA 700. If you see, there are various appendix given in SA 700 whereby the format of various kind of opinions are given and the same language is used. So auditors follow SA 700, right? So right. So the next topic which was left in the elements was the other reporting responsibilities. Other reporting responsibilities paragraph. See, these are the reporting responsibilities whereby the auditor is telling about the opinion. He is giving his opinion, his basis of opinion, management's responsibility, auditor's responsibility, then going concern and key audit matters if applicable. Suppose under the laws and regulations, as per any legal provisions or regulatory requirement, the auditor is required to give an opinion, to give a report on the matters which are specified in those provisions. Example, your CARO 2016, if the auditor is required to report, or various, there are various matters on which the auditor is required under section 143 subsection 3, right? Or rule 11, or section 197 subsection 16 with respect to managerial remuneration. So this paragraph says that if auditor is having separate some other reporting responsibilities, some other reporting responsibility under laws or regulations, auditor may include a separate section and the heading will be report on other legal and regulatory requirements. Let me just take you through the report, then you will be able to understand this point. See, a report is also given in your module. You should go through it once. So this is the report, right? And independence auditor report to the members. See, this point, report on other legal and regulatory requirements. So it says that if the auditor is required, so it is not necessary that the auditor will be required. So if the auditor is required, if CARO is applicable, do one thing, make a separate section and give the heading. Let me just show it to you. Give the heading report on other legal and regulatory requirements. This is the heading, report on other legal and regulatory environments, and then you mention whatever are your legal requirements. For example, if you are required to give a report as per CARU 2016 or 20, whatever is applicable, so mention there and give the annexure number. Okay, same way in terms of section 143.3, see whatever opinion we have given earlier, whatever going concern, key audit matter, that is required by the SCs. Now, if something is required by, say, Companies Act, for example, section 143 of the 3 of the Companies Act, asks the auditor, it is the duty of the auditor to report that the auditor has sought and obtained all the information. So where to mention it? Make a separate paragraph with the name report on legal and regulatory environment, requirements, right? Then these are the various requirements of, say, section 143, subsection 3, that books of accounts as required have been kept and everything. Okay? Then if you need to, the auditor is also required to say that on the basis of written representation, the receipt from the directors, none of the directors is disqualified in terms of section 164, subsection 2. So where to mention it? You can mention it here. And auditor is required, if auditor is required to give a report on internal financial control, then you can refer it here and give an annexure. Same way, if as per Rule 11 of Companies Audit and Auditors Rule 2014, the auditor is required to give his report, then he may report here, that is with respect to the pending litigations, with respect to the provisions, and with respect to transfer of amount to the Investor Education and Protection Fund. So basically, let me just show you, see, this is the separate heading. And when there is a report on other legal and regulatory requirements now, what we do is, when we started our report, here we'll be mentioning before the opinion report on the audit of standalone financial statements. That this paragraph, all these paragraphs relate to the report on financial statement. Then there is a separate section which says report on other legal and regulatory requirements. And let us just have a look here also. All these requirements you have already read, you have already done in chapter number 10. So report on other legal and regulatory requirements. So see, he's saying what? We have sought all the information, all the books of accounts have been made, right? Whatever was the requirement of section 143, subsection 3. Then with respect to Rule 11, that pending litigations have been disclosed, that provisions have been made, there are no delays in transferring the amounts to Investor Education Fund and Protection Fund. That in terms of section 197, subsection 16, that is with respect to managerial remuneration. In our opinion, to the best of our information, according to us, the remuneration paid to the companies, to its director during the year is in accordance with section 197. So where in the auditor's report, auditor can report on all these issues in a separate paragraph, and the heading will be report on other legal and regulatory requirements. So this was all about, and see, this is a practical audit report, and this is how it actually, the audit report is actually made. So whatever are the wordings that are given, whatever are the wordings, they are exactly used in the practical life. Now there is a question, who is asking this question? Why the report need to be comparable? Why we are following this format? See, Abhishek is asking this query. See, SA 700 asks the auditors to follow specific headings, and the auditor is required to give his comments, his whatever is required under those headings. Now, if all the auditors all across the countries with respect to all the companies, if all the auditors are following the same, so first of all, the valuable information will come in the audit report. So the value addition is there, right? And now, see, we will see later on when we'll be doing SA 705. Here, the name of the opinion paragraph is opinion. But when the auditor gives a modified opinion, the name will be qualified opinion, adverse opinion, या disclaimer opinion paragraph. So when a user of the financial statement just have a look at the audit report, immediately he is able to know, acha, there is qualified opinion. The auditor has qualified the opinion. There is an adverse opinion, so auditor has given an adverse opinion. So the understandability of the users increases, the credibility increases, and automatically the comparability increases. Clear? So that is why a set format has been given. And students, why are we conducting this audit? Ultimately, the end result is what? Audit report. So unless and until there is a set standard format for the auditor's report, a good reporting won't be possible. So now the auditors are required in terms of SA 700 that with respect to going concern, if there is material uncertainties, they need to report. So automatically the value of the reporting will increase. Clear, Abhishek? Right? So with this, we have completed the format of the auditor's report. And there is a next point, which I'll just quickly take you through that point. Then I'll be starting with SA 705. See, whatever we have done so far, the title, the forming of opinion and modified opinion, this is SA 700, that is forming an opinion and reporting on the financial statement. And we have discussed a report whereby the auditor is required to report under the SAs, right? Now, suppose the auditor is required to give a report under the laws and regulations, right? So the question arises, if you remember when we were discussing the basis of opinion paragraph, the first point was the auditor is saying that the audit has been conducted based on standards on auditing, in accordance with standards on auditing. So the next question is that suppose the auditor is required to give his report under any law and regulation, not as per SA, but the auditor has performed all the audit procedures and auditor has made his audit report. Can the auditor give a reference to standards on auditing? Because here he is required to report under laws and regulation, not under SA. So the provision is, the SA says that there are certain minimum elements. If the auditor includes all those elements in his audit report, then the auditor can give a reference to the SAs that the report is prepared based on SA. If those minimum elements are not present in your report, then please don't give a reference to those SA. Because if you want to give a reference to those SA, so those bare minimum elements of the audit report must be present. Simple. Plus, it says that there are certain A to M points. I'll just take you through those points. Then it says that those elements should be present. However, like we said that while we were discussing the report under SA, that the basis of opinion paragraph should immediately follow the opinion paragraph. You remember there was a word directly following the opinion paragraph. So it says such sequence, if that is not followed, then that is not a problem. You may still refer to SA, but the minimum elements should be there. So let me just take you through the module, a very simple topic. So what is this topic? Auditor's report. Where is my pen? Just a minute. Auditor's report prescribed by law and regulation. So what is this topic? It is saying when the auditor is I'm explaining this to you in 2 or 3 lines. When the auditor is required to give his opinion under any law or regulation and not as per the SA, so can the auditor give a reference that he has done the audit in accordance with SA? Because he'll be performing the audit procedures in terms of SAs. Now, whatever has been mentioned, so it says, SA 700 says that, see auditor, if you have all these bare minimum elements in your audit report, then you can give reference to the SAs. So see, very simple, see. SA 200 explains that auditor may be required to comply with legal regulatory requirements in addition to SAs. When the difference between the legal and regulatory requirements relate only to layout and wording of the auditor's report, the requirements stated below, A to M, set out the minimum elements to be included in the audit report to enable a reference of SA. The auditor can give a reference of essay only and only if these minimum elements are present. What are those minimum elements? You will see all the things that we have discussed earlier. Title should be there, addressee should be there, opinion should be there. You should mention that the financial statements have been audited. Then you will see that independence laws, ethical requirements should have been met. Then 570, then basis of qualified adverse opinions, and then 570, that is material uncertainty. See, it is not saying that opinion paragraph should be followed by your basis of opinion, right? So SA 701 should come, management's responsibility should come, auditor's responsibility should come, and these, everything is coming, whatever we have discussed. However, see, in those circumstances, the requirement stated in paragraph 3.1, what is 3.1 paragraph in your module where the entire format is given? If these are not included, for example, what? Ordering, that is the order of opinion and basis of opinion paragraph need not be applied. So even if they are not in sequence, that doesn't matter, but these minimum elements should be there. So a very simple topic which says that if the audit has been conducted, the auditor's report is prescribed by law regulation, that then auditor can give a reference to the essays only if these minimum elements are present. Sequence of opinion, paragraph followed by basis of opinion may not be followed. Clear? Simple topic. So with this, we have completed essay 700. I will revise it at the end of the session, the entire essay. After this, there is an independent auditor's report which is given in your module. So I want you people to read that report as a homework and to read the entire chapter that we have done so far as your homework. Now, let us start with essay 705. Clear so far? Are you all ready for essay 705, which relates to modification of the opinion in the independent auditor's report? Modification to the opinion in the independent auditor's report. Quickly tell me, whatever we have discussed so far, whether it is clear or not. So our next topic is essay 705. Quickly tell me whether everything we have done so far is clear or not. Modifications to the opinion in the independent auditor's report. So this is the name, and this is with respect to what? Modified opinion. So what is meant by modification? That you are putting certain condition or restriction on your opinion. It is not unmodified. It is not a clean report, right? So look at the name, modifications to the opinion in the independence audit report. An independence auditor report, the format is given where? In SC 700. So students try to understand SC 700, SC 705, which is with respect to modification, SC 701, key audit matter, and 706, emphasis of matter and other matter, paragraph. All these essays help an auditor to bring out the output of his audit, that is an auditor's report. So the name is modification to the auditor in the independence auditor report. The format which is given in SA 700 with respect to independence auditor's report will follow with some modifications. Why? Because here we are not giving unmodified opinion, we are giving a modified opinion, right? So just again have a look at the name of the essay. Modification to the opinion in the independent auditor's report. And where is this independent auditor's report format given? In SA 700. So that will follow, but with respect to certain modifications. And students, in fact, this essay starts with saying, if you read this essay, essay 705, with respect to modifications to the opinion in the independence auditor report, it says, I told you that all the essays are linked. An auditor will use all these 4 essays to bring out the audit report, right? So this essay says that suppose the auditor is forming his opinion in terms of essay 700, and while he is concluding, he concludes that a modification is necessary. See, when we start an audit, when we are concluding, we are trying to give an unmodified opinion, right? The format is given in essay 700. Now, while he is concluding, and what were the 3 factors that auditor will take into account for conclusions we have done in essay 700? The sufficient appropriate audit evidence. Then I need answers. What were the 3 things that the auditor will consider while he is making the conclusions based on which he is forming an opinion? I have told you the first point, and the first point is with respect to sufficient appropriate audit evidence. Then whether the uncorrected misstatement are material, and the third point is certain evaluation. So when the auditor was drawing the conclusions, he concludes that a modification to the report is necessary. Why? Because he found something material misstatement, something like material misstatement. So auditor will give a modified opinion. And essay 705 talks about the various types of modified opinion and what will be the form and content of the audit report in case of modified opinion. And student, the form and content will be the same as we have done in essay 700, but with certain modifications. Like there you used to write opinion paragraph. The third point was as an element. Here you will be writing qualified opinion, or adverse opinion, or disclaimer of opinion. There are 3 types of modified opinion. I'll be discussing them, but you will be writing, the name will change. There you were writing basis of opinion. Here you will be writing basis of qualified opinion, basis of adverse opinion, basis of disclaimer of opinion. Clear? And there will be certain changes in auditor's responsibility paragraph, in basis of opinion paragraph. So we will discuss all of them. Clear? So I told you that this essay 705 states that when the auditor is concluding in terms of essay 700, he is forming an opinion and he reaches at a conclusion that a modification is required, then provisions of this essay will apply, and whatever will be the form and content is given here. Now, when will an auditor consider that modification is necessary? This is a very important point. When will the auditor consider that a modification is necessary? So, when is modification necessary? So, there are 2 situations. See, there are 2 situations. Either the auditor has obtained the sufficient appropriate audit evidence, or second case can be where the auditor is unable to obtain sufficient appropriate audit evidence. Okay? So suppose in the first case, the auditor obtains a sufficient appropriate audit evidence that the financial statements are not free from material misstatement. So can we as an auditor give an unmodified opinion? We have obtained a sufficient appropriate audit evidence that the financial statements are not free from material misstatement, whether due to fraud and error. So can you give an unmodified opinion? No. Second case, when the auditor is unable to obtain sufficient appropriate audit evidence, he is unable to obtain, maybe because of some limitation imposed by the management. Tell me whether you as an auditor, will you give an unmodified opinion? No. There will be a modification, and what kind of modification, it depends upon 2 factors which we'll be discussing. So let me just write this for you, that when will an auditor consider that the modification is necessary? There can be 2 situations, as I told you, that if he has obtained sufficient appropriate audit evidence that financial statements are not free from material misstatement, that the financial statements are not free from material misstatement, or the second situation where he is unable to obtain sufficient appropriate audit evidence. And why was that audit evidence required? To conclude that financial statements are free from material misstatement. See, either though he has evidence, see, when will an auditor give an unmodified opinion, that is a clean report, when he has an audit evidence that financial statement are free from material misstatement, right? So here he is not able to obtain that audit evidence, so unmodified opinion cannot be given. And the second situation is when the audit evidences that is obtained, he becomes sure that the financial statement are not free from material misstatement. Clear? So these are the two situations whereby the modification becomes necessary. And in terms of essay 705, the objective of the auditor is to give an appropriately modified opinion when these two situations happens. Either he has the audit evidence that financial statements are not free from material misstatement, or he is unable to obtain the audit evidence. Clear? Clear so far? So what we have discussed is, while he was concluding, see, the conclusion is based on audit evidence. First point was what? Audit evidence. Now, one situation can be he is unable to obtain audit evidence. So we cannot give an he cannot give an unmodified opinion. Simple. And second is, when he was obtaining the sufficient and appropriate audit evidence, he concluded that the financial statements are not free from material misstatement. So both the cases, auditor cannot give an unmodified opinion. Auditor will have to give a modified opinion. Now, what kind of modification? Modification is what? A kind of condition is added. So there are three types of modified opinion. What are the types? There are three types. I call it as quad, that is qualified, adverse, and disclaimer of opinion. See, very simple concept, but very important. You can get these questions like a straightforward question, what is qualified opinion? Or a case study that is as to in this situation, what kind of opinion the auditor should give. Or an MCQ can come or a true false can come. So this is a very important concept as to what is a qualified, what is adverse or disclaimer, or what are the different types of opinion. So students, when I was telling you that what kind of modification, what kind of opinion auditor will give, it depends upon two factors. And those two factors are materiality and pervasiveness. Now, what is material? You all know that which has an effect on the economic decisions of the users of the financial statement, or whatever materiality has been given by FRF. So see, if an auditor finds that there is a material misstatement, so can the auditor ignore it? No. He will have to modify his opinion. So this is one. And this is the most important thing, that a modification will come only if the misstatement is material. Why? Because we as an auditor, we are concerned, owing to the provisions of SA 320, owing to inherent limitations of audit, we are concerned with material misstatements only. So whenever any material misstatement is there, modification will happen. What kind of material, what kind of modification is dependent upon second factor, which is called pervasiveness. What is the dictionary meaning of pervasive? Quickly, I need answers if any one of you knows. So what we were saying is that what type of opinion, it depends upon two factors. which is what? Materiality of misstatement. Materiality of what? Misstatement. And pervasiveness. So what is meant by materiality? We have understood. What is meant by being pervasive? What is the dictionary meaning of pervasive? Anybody is having any idea? See, Sanjay, modification, if you look at the dictionary meaning of modification, it means something which is conditional or something whereby some restriction has been given. So you are modifying, that is, the auditor is not giving a clean report as we have given in SA 700. Right? 700 was with respect to what? Unmodified opinion, that the financial statement give a true and fair view. It presents fairly in all material respect as per the applicable FRF. If you remember the language that can be used. So modification is that, and unmodification is unmodified opinion is that. And what is modification? The dictionary meaning is when you are adding a condition which is not a clean report. Right? So I asked you about pervasiveness, and Kamal is saying it is everywhere. Sakshi is saying applicable to all. Atul is saying it means present everywhere. Sanjay spread of overall. Kavya saying all prevailing. Priyanka is saying present in all parts. And Vanshika is saying continuous. Kavya is saying all prevailing. Abhishek is saying widespread. Yes. So we have seen that in order to modify opinion, first and foremost, that misstatement should be material. That misstatement should be material. Then only the auditor can modify the opinion. And secondly, what type of opinion the auditor will give depends upon the pervasiveness. In terms of SA 705, students, we basically, when we are using the word pervasive, we want to see this with respect to the effect of misstatement on the financial statement. Whether it is affecting the financial statement as a whole, or whether the effect is confined to one item or two items of the financial statement. What is the impact of that misstatement? Material, that is, we have understood. It is material as per applicable FRF, or it affects the economic decisions of the users of the financial statement. That is done. That is, modification will come if any material misstatement is there. But what kind of modification depends upon the pervasiveness. That is, what is the effect? The word pervasive here in terms of SA 705 is used in order to see the effect of this material misstatement on the financial statement. Whether it has an effect on the entire financial statement, the Hindi word is sarvatra. It is present everywhere in the financial statement, or is it confined to one or two items of the financial statement? Pervasiveness is clear. Let me just take you through the definition of pervasive so that it becomes clear. Then we'll discuss the qualified, adverse, and disclaimer. So, what is meant by pervasive? See, the term in context of the misstatement is used. Why? To describe the effects on the financial statement of what? Of misstatement. This possible effect I'll take later on. But as of now, try to understand. In order to understand the effect of the misstatement on the financial statement, we use the term pervasive. And when will we consider a misstatement as pervasive? When the misstatement is not confined to specific elements. or if so confined, it is present or could present a substantial portion of financial statement or in relation to disclosures are fundamental to the users of the financial statement. Now, what is meant by this? Let me just explain this to you, all the 3 points with the help of an example. So this you have understood what is meant by pervasive. Pervasive means we want to basically see whether it has an effect on the financial statement as a whole, right? So suppose there is the PPE, property, plant and equipment. Just a minute. The property, plant and equipment of XYZ is not valued properly, right? Now, what all effect will it have? It will have an effect in the balance sheet on the PPE value that is coming. Then depreciation figure is also affected by this, so it will have an effect on the P&L. Then the disclosures are also affected, whereby the disclosures with respect to PPAs are required. So I cannot say it is limited to one item. It is spread all over the financial statements. So are not confined to specific elements or items of the financial statement. I hope this is clear. Now, let us take the other example. Suppose the debtors are not, or let me just take the example of, say, inventories. The debtor or your inventory is not valued properly. So it is confined to, say, one item, but this inventory constitute 80% of your total asset. So if so confined, if it is confined to one item, that one item represent or could represent a substantial portion of the financial statement. Clear? Though it is limited to that only, but it constitutes a substantial portion of the financial statement, and any of the disclosures which are fundamental to the user's understanding of the financial statement. So if any such disclosure is misstated, we will consider it as pervasive. So what is meant by pervasive? First of all, we want to consider the pervasiveness of misstatement in order to see its effect on the financial statement. Whether it is confined to one item, whether it is spread all over. If it is spread all over, it is pervasive. If it is confined to one item, but that one item constitutes a substantial portion of the financial statement, it is again pervasive. And if a disclosure is misstated and which has an effect on the user's understanding of the financial statement, then also it will be considered as pervasive. So students, tell me the two factors on which the modification of the auditor's report depends: materiality and your pervasiveness, whether these are clear or not. Materiality and pervasiveness. Quickly. Now the voice is clear. So I was saying that we have done the types of opinion are qualified, adverse and disclaimer. Now, whether it will be qualified or adverse or a disclaimer of opinion depends upon two factors, which is materiality means a modification will come. A material misstatement means a modification misstatement will come. Why? Because a material misstatement is there, I cannot give an unmodified opinion as an auditor. I will have to modify. But what kind, whether it will be qualified, it will be adverse or disclaimer of opinion, we have seen that it depends upon the pervasiveness. So let us first discuss the qualified opinion. I hope students, you can now hear me. So, yes, ma'am, now clear. Clear? So qualified opinion. Now, see, when will I give an unmodified? Unmodified is SA 700. When I, as an auditor, I obtain sufficient appropriate audit evidence that the financial statement are free from material misstatement. Clear? Now take the opposite of this. I obtain sufficient appropriate audit evidence that the financial statement are not free from material misstatement. If such is the situation, a qualified opinion will come. So I can say, having obtained sufficient appropriate audit evidence, auditor concludes that financial statements are not free from material misstatement, and he concludes that misstatement is material but not pervasive. See, when the auditor concludes that the financial statement are not free from material misstatement, a modification will come. Okay? Now, what kind depends upon what? Pervasiveness. So, when the auditor has obtained sufficient appropriate audit evidence that the misstatement that is present, it is material. So, modification is required, but it is not pervasive. It is not affecting the financial statement as a whole. That means, except for this point, except for this misstatement, the rest of the financial statement give a true and fair view. Auditor feels that except for this misstatement, the financial statement as a whole give a true and fair view, right? So what kind of opinion will auditor give? Auditor will give a qualified opinion. That is, he wants to say that except for this misstatement, which I cannot ignore, but rest everything is fine. So that is called a qualified opinion. Clear? Second situation in case of a qualified opinion is, see here auditor has obtained the audit evidence. Here he is unable to obtain sufficient appropriate audit evidence, and here auditor concludes that here we were saying that effect of misstatement is in the first case we were saying effect of misstatement is material but not pervasive. Here auditor is considering that though I have not received, but here also auditor concludes that the possible effect, the term possible is important here, and I will tell you why. Possible effect of misstatement is material. See, it will be material now. Then if it is material, then only a modification will come, right? And pervasive. That is, this thing is this is material and not pervasive. So what is auditor saying? Qualified opinion will come in two situations, whereby auditor, first case is auditor receives sufficient appropriate audit evidence and he feels that this misstatement with respect to which I have received insufficient appropriate audit evidence, this is material, but it is not pervasive. So I'll just qualify, I'll just put a condition that except for this thing, everything is fair. Clear? Secondly, Suppose he has not obtained sufficient appropriate audit evidence, but he feels that the possible effect of such misstatement will be what? Material and not pervasive. So why the word possible? Because here he has not obtained the sufficient appropriate audit evidence now. So applying his professional judgment, he can only conclude what possibility is there. So he concludes that it will be material and not pervasive. So both way, in both the situation, materiality is there, but pervasiveness is not there. So in both these situations, a qualified opinion will come. He'll just qualify that except for the effect of this misstatement, the financial statement reflected true and fair view. And what will be the language here? Except for the possible effect of this misstatement, the financial statement reflected true and fair view. Why the word possible? Because he has not obtained sufficient appropriate audit evidence. Now he can just apply his professional judgment and consider the possibility what can happen. Clear? Let me just explain this with the help of an example. Suppose there are long-term loans and short-term loans of XYZ Limited, and the company has not shown the bifurcation of such loans. One lump sum figure of loan is given and bifurcation of such loans is not given, and the auditor feels that this is material. The company should have disclosed this. Now tell me, is it pervasive? Is it affecting the balance sheet as a whole, or is it affecting the P&L as a whole, or the disclosures? It is limited to the loan point. Now it is not affecting the financial statement as a whole, so it is not pervasive. So here, this is a misstatement for sure. And since this has an effect on the users of the financial statement, this is material. But this is not pervasive. So auditor will give a qualify. He'll just qualify. What will he say? That except for this misstatement, the rest of the financial statement give a true and fair view. I'm just putting a condition that except for this, everything is fine. Clear? So when he has obtained sufficient appropriate audit evidence or he has not obtained, both the cases, the misstatement is material and the effect or the possible effect is what? Not pervasive. He will give a qualified opinion. Clear? What is a qualified opinion? Some misstatement is there for which I don't want to say that the financial statement as a whole are not correct, are not giving a true and fair view. I don't want to say that. But I cannot say that financial statement represent an unmodified opinion, that they represent a true and fair view. So what will I do? I'll say that except for this point, everything else is fine. So, so this situation is called a qualified opinion, where there will be two situations, right? And in order to understand what is meant by adverse and disclaimer, students try to understand. Where should I write? See, try to understand that in this situation, when the auditor feels that sufficient and appropriate audit evidence he has obtained, and this is a material misstatement, plus there is pervasiveness. This misstatement is material, so I will give a modification. But this is pervasive also. So giving only qualified opinion is not possible. This misstatement is material and it is impacting all the entire financial statement. And because of the significance of this misstatement, I am saying that the financial statement do not present a true and fair view. They do not give a true and fair view. So when this portion is accompanied by pervasiveness of the misstatement, the auditor cannot just give a qualified opinion. He will have to give an adverse opinion. And what is meant by that? I can say, having obtained sufficient appropriate audit evidence, auditor concludes that the effect of misstatement is both material and pervasive. Pervasiveness also comes. So just giving a qualified opinion will not work. I will have to give an adverse opinion. See there, what was my wording in case of qualified? That except for this misstatement, entire financial statement reflected true and fair view, right? And here what I'm saying, because of the significance of this matter, this misstatement, the financial statement do not represent a true and fair view. See, this is an adverse opinion, which basically happens in rare circumstances, right? And similarly, in this case, second case, where the auditor is, I'll give a break after this. If the auditor is unable to obtain sufficient appropriate audit evidence, but he concludes that the possible effect of the misstatement is both material and pervasive. Now, in this situation also, if pervasiveness comes, that is, this may affect the financial statement as a whole. Here he is what? Unable to obtain sufficient appropriate audit evidence. But material bhi hai, plus it is pervasive also. What is material and pervasive? That misstatement. And giving just a qualified opinion will not solve my purpose. Auditor will disclaim that opinion. Disclaimer of opinion. Students, what is the meaning of disclaimer of opinion? Basically, auditor wants to say that, see, the dictionary meaning is of disclaimer is you do not know anything about this thing, that I don't know. Why? Because I'm unable to obtain sufficient appropriate audit evidence. And what is meant by adverse? The dictionary meaning of adverse is negative. So giving only a qualification won't work. I will have to give a negative opinion, adverse opinion. And here, giving a second case, giving a qualification is not just enough. I will have to disclaim the opinion. Why? Because I am unable to obtain sufficient appropriate audit evidence, and the possible effect of that misstatement is it may be material and pervasive. So that is called disclaimer of opinion. The example of this adverse opinion and disclaimer of opinion. See, example of qualified with respect to this. I hope this is clear. So here I'll take a break of 10 minutes and then we'll be discussing the example of your adverse and disclaimer of opinion. And the next session is going to be very important because I'll be completing SA 705 plus I'll try to complete SA 701 also. So a quick break of 10 minutes and after sharp 10 minutes we'll meet. So students, I hope you all are back after the break and you all are prepared for the further discussion. So let me just quickly tell you what we were discussing. So see, when we as auditor, we give an unmodified opinion when we feel that the financial statement, we have obtained sufficient appropriate audit evidence that the financial statement are free from material misstatement. We will give an unmodified opinion, right? Now, when we feel that the financial statement are not free from material misstatement, a modification will come, right? Now, there are three types of modification: qualified, adverse, and disclaimer, right? And in fact, when we are unable to obtain sufficient appropriate audit evidence to conclude whether the financial statement are free from material misstatement, a modification will come in these two situations. That is when we receive, when we obtain sufficient appropriate audit evidence that the financial statement are not free from material misstatement, or when we are unable to obtain sufficient appropriate audit evidence to conclude that the financial statement are free from material misstatement, a modification will come. Now, what kind of modification? It can be qualified, adverse, or disclaimer. So in case of qualified, when the auditor is able to obtain sufficient appropriate audit evidence that there is a misstatement which is material, though not pervasive, a qualified opinion will come. Same way, if he is unable to obtain sufficient appropriate audit evidence and he concludes that a possible effect is material but not pervasive, a qualified opinion will come. In these two situations, when the pervasiveness comes, that is, the auditor obtains sufficient appropriate audit evidence that the misstatement is material as well as pervasive, giving just a qualified opinion will not be sufficient. He'll give an adverse opinion. That is a negative opinion, that this matter is so significant, the entire financial statement do not reflect a true and fair view. And in case of disclaimer, when the auditor is unable to obtain sufficient appropriate audit evidence and he concludes that the possible effect could be what? Material and both pervasive, his disclaim that I don't know. Why? Because I'm not able to conduct the audit. I was not able to obtain the sufficient appropriate audit evidence. And I think that the effect is going to be both material and pervasive. So I'm disclaiming the opinion, right? That is, only a qualification is not possible. This thing will be more clear from this table given in your module, which beautifully explains the three types of opinion. So what is the nature of matter giving rise to modification? Auditor's judgment about pervasiveness. So when the financial statements are materially misstated and the misstatement is material, but it is not pervasive, so the auditor will give a qualified opinion. If you remember, I gave you example of bifurcation of loans and loans, long-term and short-term. Though it is material, it was required for the user's understanding, but is not pervasive, so qualified opinion. However, if there is pervasiveness also, that is, financial statements are materially misstated and the misstatement is material as well as pervasive, an adverse opinion will come. I'll give you an example. Then when there is inability to obtain sufficient appropriate audit evidence and the auditor feels that it is the possible effect, see the word is here, possible effect. So the possible effect is going to be material but not pervasive, he'll give an qualified opinion. And where the auditor feels that there is an inability to obtain sufficient appropriate audit evidence and the possible effects of such misstatement on the financial statement is both material and pervasive, he'll give a disclaimer of opinion. Now, let me just give you an example of what adverse opinion. So, students, let's say, I hope this is clear. So, adverse. So, let's say the inventories and debtors of XYZ are not realizable, right? And these two constitutes about 80% of total assets. Now tell me, can I give an unmodified opinion? Or in fact, can I write that except for this, everything is correct? See, this is constituting 80% of total assets. And what was the definition of pervasiveness? That even if it is confined to one or two items, they form a substantial portion of the financial statement. So now this becomes what? Pervasive. I'll just take you back to the definition of pervasive. What was the definition of pervasive? It was mentioned that even if it is so confined to one or two items, those items represent or could represent a substantial portion of financial statement. And in my example, I have told you that they are 80% of the total assets of the organization. Tell me whether it becomes pervasive. Yes. And material, this is material. It will affect the decision of the further debtors. It will affect the decisions of the shareholders. So it is both material and pervasive, and giving just a qualification is not enough. So auditor will give an adverse opinion. What will auditor say? That because of the significance of this matter, the financial statement do not reflect a true and fair view. Suppose, let me just add on to this situation, the inventory and debtors of, let me just take you through the example in the module itself. So we were discussing what? See, during the course of audit, CA Taj, the engagement partner, found that the stocks and debtors of the company constituting 80% of total assets of the company are not realizable. Further, the cashier of the company has committed the fraud, and both the facts are not reflected in the financial statements. Now, whether both the facts are material for the users of the financial statement, yes. So CA Taj is of the view that the impact of both the situation is both material and pervasive. See, it's mentioned that the fact is not reflected in the financial statement. So auditor is saying that the financial statement, that both these items are so significant that because of the significance of these matters, auditor is saying that the financial statement do not represent a true and fair view. Why? Because these facts are not reflected in the financial statements. Clear? So this was an example of your adverse opinion. Now let us see with respect to disclaimer. Now, disclaimer. Suppose the company XYZ Limited has earlier the accounts were maintained on a manual system. Now the accounts are maintained on some computerized system, say SAP, right? And this system is not yet in place. The auditor is not able to draw the reports from the system which it requires, plus there is no support from the management. Now tell me, in this situation, can I give an unmodified opinion? No, because in an unmodified opinion, sufficient appropriate audit evidence is obtained. Here, sufficient appropriate audit evidence is not obtained. And see, why qualified will not come here? Because see, when I'm unable to obtain the reports, I'm unable to do the work, I consider that the effect is going to be both what? Material as well as pervasive. So I, as an auditor, I will not give an opinion. I'll do what? I'll disclaim this opinion. That is, I'll give a disclaimer of opinion. That what does the disclaimer of opinion? See, this is as good as I'm not giving any opinion. Why? Because I'm unable to work on perform my audit procedures. I'm unable to obtain the sufficient appropriate audit evidences. Now let us just quickly have a look at this example with respect to disclaimer. See, Delightful Limited is a company engaged in production of smiley balls. During the financial year, the company transferred its account to computerized system from manual. Since the employees of the company were not well versed with SAP system, there were many errors. There were many errors in the accounting during this transition period. As such, the auditor of the company were not able to extract the correct data and reports from the system. Such data was not available manually also. Further, the employees and management of the company were not supportive. So auditor is not getting any data. Explain the kind of audit report. So what is the answer here? When the statutory auditor of the company is unable to obtain sufficient appropriate audit evidence, the auditor should give disclaimer of opinion in terms of SA 705. In the present case, the statutory auditor of the company is unable to extract correct data and reports from the SAP system for conduct of audit. Also, such data and reports are not available manually. As such, statutory auditor should give a disclaimer of opinion. Right? Clear? So this was about your adverse opinion, qualified opinion, and disclaimer of opinion. And I hope everything is clear with respect to SA 705. See what all we have discussed. SA 705, and I told you this SA says that when you were forming the opinion as per 700 and the auditor concludes that a modification is necessary. So it deals with auditor's responsibility to issue an appropriate report in circumstances when forming an opinion in accordance with SA 700. The auditor concludes that modification to the auditor's opinion is necessary. And what are the various types of modified opinion? See, these parts I'll be taking later on. So qualified, adverse, and disclaimer. So what are the circumstances? There are two circumstances. When the auditor obtains a sufficient appropriate audit evidence that financial statements are not free from material misstatement. We are talking about what? When will auditor modify the report? So when he obtains these audit evidence that financial statements are not free, or when he is unable to obtain sufficient appropriate audit evidence to conclude that financial statement as a whole are free from material misstatement. See, when we are saying that financial statements are free from material misstatement under unmodified opinion, SA 700, we should have some audit evidence now. So if we are unable to obtain that, we will come in SA 705. So objective is to express clearly and appropriately unmodified opinion when the above two circumstances happen. Clear? So these are the same. That is when you obtain sufficient appropriate audit evidence that the financial statements are not free from material mistake, or you are unable to conclude that. What are the types? These are qualified, adverse, and disclaimer. What is meant by qualified? Two situations where having obtained qualified is having obtained sufficient appropriate audit evidence. The auditor concludes that misstatements individually or in aggregate are material but not pervasive to the financial statements, or the auditor is unable to obtain sufficient appropriate audit evidence on which to base opinion, but the auditor concludes that the possible effects, and now I think you are able to understand why the word possible, this word possible here is very important. Why? Because audit evidence has not been obtained. So he can just conclude the possibility. The possible effect on the financial statement of undetected misstatement could be material but not pervasive. This example with respect to bifurcation of loans we have done. What is adverse? The opinion shall be adverse when having obtained sufficient appropriate audit evidence, the auditor concludes that the effect is both material and pervasive on the financial statement. What is pervasive? We have seen. Example we have seen. Now, what is meant by disclaimer? The auditor shall disclaim an opinion when the auditor is unable to obtain sufficient appropriate audit evidence on which to base the opinion, and it concludes that the possible effect of the financial of such undetected misstatement. Why undetected? Because he is not able to obtain sufficient appropriate audit evidence. Now, the misstatement is still undetected, and it could be both material and pervasive, and it happens in extremely rare circumstances. See, disclaimer of opinion is as good as not giving an opinion. And why was the audit conducted? The engagement was between the entity and the audit team. Why was the audit engagement was signed? Because the management wanted an end result, which is what audit report. The auditor is also working throughout the course of audit. He's performing audit procedure because he wants to give an end result, which is what audit report. And when you are saying that I don't know about this, I'm disclaiming it, I have no responsibility. Is it an opinion? No. So it basically happens like a very rare circumstances. Clear? So the example we have discussed. Now, Which type of opinion? I told you that it depends upon what? The nature of matter giving rise, whether it is material, right? And the pervasiveness. This is clear. This is also important. You can have a get a short note. This table we have done. Then try to understand this, and this entire paragraph is given in your this diagram. So I teach you from the module itself. So what does it say? It says that suppose, see, when will you as an auditor, you will disclaim an opinion when you are unable to obtain sufficient appropriate audit evidence. And when will that happen? Suppose a limitation imposed by the management. Management is not allowing you to attend the physical verification of inventory. A limitation has been imposed. So that is why you are not able to obtain the sufficient appropriate audit evidence. So suppose there is an inability to obtain sufficient appropriate audit evidence due to a limitation imposed by management. So what will an auditor do? First of all, the auditor will ask the management that management, please remove this limitation now. Please allow me. If management removes that limitation, okay, proceed further with your audit procedures, right? Simple. If management doesn't remove that limitation, first, if those charged with governance are separate from management, then first of all talk to those charged with governance, communicate this matter to those charged with governance. Clear? If still you are unable to obtain sufficient appropriate audit evidence, right? So if you consider now you are unable to obtain, so you will conclude on what? The possible effect. So if you think that the possible effect, why possible? Because you are unable to obtain sufficient appropriate audit evidence. Huh? So if you feel that the possible effect of such misstatement is going to be material but not pervasive, give a qualified opinion. On the other hand, if you feel that the effect of such misstatement is going to be both material and pervasive, give a disclaimer of opinion or withdraw from the engagement. Now, students, see, withdrawing from the engagement or giving a disclaimer of opinion is, I told you, in very, very rare circumstances. So, but these provisions are given in Essay 705. So, let us just have a quick read. So, this you can read. I'll just take you through the summary. What is the topic? Consequences of an inability to obtain sufficient appropriate audit evidence. So inability to obtain, so we know this is the case of what? Qualified or disclaimer. Adverse will not come. Now why? Because in adverse we know that all evidence is obtained that the financial statement, that the misstatement is both material and pervasive, right? So inability to obtain, that means qualified and disclaimer, due to management imposed limitation after the auditor has accepted the engagement. See, if before the auditor accepted the engagement and the management told the auditor that, see, you may sign the terms of engagement, but we will not allow you to inspect the inventory. We will not allow you to attend the physical inventory count. So will you still sign that the engagement terms? No. So if after accepting that something like this happens, so what will auditor do? So let us just have a look at this diagram, which in entirety explains what is mentioned above. So first of all, request the management to remove. If management removes such limitation, proceed further. If management refuses to remove the limitation, first of all, communicate with those charged with governance and perform alternate procedures. Try to perform alternate procedures. If still you are unable to obtain sufficient appropriate audit evidence, then conclude with respect to the possible. Why possible? Now you all know, because you are unable to obtain sufficient appropriate audit evidence. Then consider the possible effect. If that is material but not pervasive, give a qualified opinion. If that is material as well as pervasive, give a disclaimer or withdraw. And I told you this happens is rarest of circumstances. Okay? Now, when the auditor is withdrawing from the engagement, it says that before doing that, the auditor shall communicate to those charged with governance the matters regarding misstatement identified that would have given rise to the modification. So it says that auditor, then you have one more responsibility. Don't just withdraw like that. First, communicate with those charged with governance that these are the reasons which may give to a modification. Though I am not giving an opinion, I am withdrawing from the engagement. And if withdrawing from the engagement is not possible because of laws and regulation, you just give a disclaimer of opinion. But I told you disclaimer of opinion is like same as not giving any opinion. Clear? So this was a simple topic. You can read the explanation from above, and this diagram explains this topic very beautifully. See, let us now, this is your homework. You can read this illustration at home and read it carefully. You might get confused. Don't look at the answer and try to get the right answers on your own. Okay? Now, very simple topic, which is, if you remember, I told you the form and content of the audit report, a modified audit report is contained in SA 705. And what is the name of SA 705? Modification to the opinion in an independent auditor's report. What is it? Modification to the opinion in the independent auditor report. So I can say the format of independent audit report is what is given in SA 700, but I'll modify it. How? Very simple. See, when I was writing title, that is independence auditor report, followed by addressee and then opinion. Now, instead of opinion, I'll be writing whatever is the modified opinion. If it is qualified, I'll write qualified opinion. If it is adverse, I'll write adverse. If it is disclaimer of opinion, I'll write disclaimer. So that is why now the user's understanding will increase. They will see, they will quickly have a look at the third element of the audit report. They'll see, acha, it is an adverse opinion. Okay, it is a qualified opinion. It is not an unmodified opinion. Why? Because when an unmodified opinion is given, only the word opinion is mentioned. So when qualified adverse disclaimer is to be given, modify the name. Clear? Clear? Then, if you remember, we have seen the language with respect to unmodified opinion that the financial statement in all material respect present fairly as per the applicable FRF, or the second one was that the financial statement represented true and fair view as per the applicable FRF. Remember? And there we saw that the terms like subject to, except for, such terms should not be used. Why? Because such terms will be using when we are giving a modified opinion. Clear? Clear? TCWG is, Anushka, those charged with governance. Okay? So what is the change in the opinion paragraph? So see, in case of qualified opinion, if you remember, just visualize the example of bifurcation of loan into long-term and short-term. So that matter is material, but it is not pervasive. And it is not so pervasive that I need to give an adverse opinion. So what I want to say, that except for this matter, the financial statement represented true and fair view. See, if I say the financial statement do not represent a true and fair view, that is not correct now. Why? Because rest of the financial statement represent a true and fair view, and this misstatement, though material, it is not having an effect on the financial statement as a whole. So what will be the language? It will say, except for the effects of the matters described in what? Basis of qualified opinion section. Students, if you remember, I told you that whenever we are preparing the audit report in terms of essay, the opinion paragraph is followed by basis of opinion paragraph. And in the basis of opinion paragraph, the auditor gives the basis why he has given a particular kind of opinion. So if the auditor is given a qualified opinion, he'll say, in the qualified opinion paragraph, that because of the, except for the effects of the matter described where? Described in basis of opinion paragraph. basis of qualified opinion section, the financial statement represent a true and fair view. Clear? Except for this thing, which where the same has been explained in the basis of not opinion, in the basis of qualified opinion, because now you are giving what? Qualified opinion. So here the nomenclature will change, and also with respect to basis of opinion the nomenclature will change. So you will say that except for that matter which has been described in basis of qualified opinion section, rest everything is as per true and fair. Whatever language we were using earlier will be used. So see, I'll take you through the examples which are given later on. Abhi, let us try to see the language that is to be used with respect to adverse. Now, why am I giving the adverse opinion? Because giving only qualified is not sufficient. The misstatement is material as well as it is pervasive. And it is so significant that I, as an auditor, I am saying that the financial statement as a whole do not represent a true and fair view. So what will I say in the opinion, adverse opinion paragraph? That because of the significance of the matter described where in the basis of adverse opinion paragraph, when you will say the financial statement do not present fairly or do not give a true and fair view in accordance with the applicable financial reporting framework. So what is the language? Because of the significance of matters described where basis of opinion, no, basis of adverse opinion section, because now the nomenclature will change. The financial statement do not represent a true and fair view. And what is going to be the language of disclaimer of opinion? See, quickly tell me whether you are able to understand the format which we have discussed so far. First, we discussed that opinion will be changed to qualified opinion, adverse opinion, or the disclaimer of opinion. Then, basis of opinion will be replaced by basis of qualified opinion or basis of adverse opinion or basis of disclaimer of opinion. Clear? Then in the opinion paragraph, if it is qualified, the auditor will say that except for the matter which is described in basis of qualified opinion paragraph, rest the financial statement as a whole represent a true and fair view. Here. Second, if it is adverse opinion, the auditor will say that because of the significance of the matter described in the basis of adverse opinion section, the financial statement do not reflect a true and fair view as per the applicable FRF and disclaimer of opinion. Let us just see. Quickly tell me whether it is clear so far. And students, yes, I'll take the MCQs, but I'll be taking them tomorrow in the next session, not today. So quickly tell me whether is it clear? Yes, ma'am. Understood. Understood. Okay. And as well as able to distinguish. Good, Priya. Good, Sakshi. Okay. Now, what is disclaimer? See, in disclaimer, we are not giving an opinion. We are not giving an opinion. So, first of all, state that the auditor does not express an opinion on the accompanying financial statement. So, in the opinion paragraph, disclaimer of opinion paragraph specifically state that we are not, the auditor does not express an opinion. Then why? You will state that because of the significance of matter, because it is both material and pervasive, described where in the basis of disclaimer of opinion section, the auditor has not been able to obtain sufficient appropriate audit evidence to provide a basis of audit opinion. We will highlight here. First of all, we'll say we are not giving an opinion. Then we will say that because of the significance of matter described in basis of disclaimer of opinion, we are unable to obtain. We will specify this. We will tell this to the users of financial statement that we are unable to obtain the sufficient appropriate audit evidence. And students, let me just share with you the actual report of Airtel that we were discussing in order to understand the third point. So, just a minute. So, in the opinion paragraph, if you remember, we used to write, we have audited. See this word. I don't know. Let me just share. I think I have not shared this. If you remember, we have audited. Now you will not write we have audited. Why? Because audit has as such not been done now. Why? Because you are unable to obtain sufficient and appropriate audit evidence. You are not able to perform the audit procedures which you wanted to perform. Let me just show it from the module also. Basis of, just a minute. See, when we were discussing the opinion paragraph, if you remember, state that the financial statement have been audited. So now when the auditor is giving a disclaimer of opinion, first of all state that you have we are not giving an opinion. Then state that we are unable to obtain sufficient appropriate audit evidence, and then amend this line and state, instead of writing we have audited, you will see in all the reports, audit reports which are available on public portals, it is we have audited, we have audited. But now write we were engaged to audit. Why? Because you are not able to audit. Now you are not able to obtain sufficient appropriate audit evidence. See, in our example, the auditor was not able to extract the reports. So he was not able to perform those audit procedures. And what is audit? Audit is all those audit procedures now. So you will not say we have audited. You will say we were engaged to audit the financial statements, right? So this is very important that with respect to disclaimer of opinion, what all will come in the opinion paragraph. So first of all, auditor will say we are not expressing an opinion. Then he'll say why? Because of the significance of the matter described in the basis of disclaimer of opinion section, we are unable to obtain sufficient appropriate audit evidence. And third, instead of writing we have audited, it will be replaced by we were engaged to audit. We were supposed to audit. We were engaged. Why? Why did the management engage the auditors to conduct the audit? But we were unable to do that. So let us just quickly have a look at disclaimer. Okay. So we have seen that the opinion paragraph heading will change, the basis of opinion paragraph heading will change, and the wordings will change, right? Now, in the basis of opinion paragraph, what all changes will be done? Clear? Opinion paragraph is clear. So first of all, change the heading from basis of opinion to what? Basis for qualified opinion, basis for adverse opinion, or basis for disclaimer of opinion as appropriate. Clear? Simple? See, Sanjay is asking when the auditor is unable to obtain sufficient appropriate audit evidence, then how can he say it is pervasive? See, auditor has as such done the audit procedures now. Maybe with respect to some of the matters which are material and pervasive, applying his professional judgment, considering the circumstances of the client, the auditor will come out at a conclusion that the effect is going to be pervasive also. He will apply his professional judgment. If you remember our responsibility, we have mentioned that we will apply professional judgment. And also based on the circumstances, considering the last year's financial statement, considering the last year's auditor's report, auditor will form that conclusion. Clear, Sanjay? Okay. So, and now listen to me. I told you that the opinion paragraph will be followed by what? The basis of opinion paragraph. And here in the opinion paragraph, we are writing that except for this matter, which is described where? In the opinion, in the basis of opinion paragraph, or because of the significance of the matter described where? In the basis of opinion paragraph. So it says, describe that matter now. In unmodified opinion, there was no need of description. because there was no condition. Now, if you have put a condition, if you have put a restriction, now give a description. Na? In opinion, in qualified opinion paragraph, in adverse opinion paragraph, in disclaimer of opinion paragraph, you are saying again and again that we have explained that in basis of opinion. So the next line says, now give a description in basis of opinion. So within this section, with section basis of opinion, include a description of matter giving rise to the modification, be it qualified, be it adverse, be it disclaimer, give a description. And when you are giving the description, give a description and quantify the effect if it is possible. And if it is not possible to quantify the effect, then state this, that we are not able to quantify the effect also. So when the auditor is considering the possible effect, auditor may write that possible effect is going to be material and pervasive, though we are not able to quantify it, right? And then he says that if any of the disclosure is misstated, then auditor will explain in the basis of opinion paragraph how the same is misstated. If any non-disclosure is there, if you remember, we did the definition of pervasive and we saw the third point, that non-disclosure which is fundamental to the users of the financial statement, we will consider it as pervasive. So if there is a non-disclosure, first of all, discuss that with those charged with governance. See, if they consider that okay, we will make that disclosure, then it's fine. If they do not consider making that disclosure, first of all, what we said, discuss with those charged with governance, then describe that information in basis of opinion paragraph, and if the law permits, you may give what was that omitted disclosure. The auditor may also mention in the basis of opinion paragraph what is the omitted disclosure, and these 3 points. See, if any non-disclosure is made, so he will first discuss with those charged with governance, he will describe it, and unless prohibited by law, include the omitted disclosures. Okay? Then next is, if suppose the auditor is not able to obtain sufficient appropriate audit evidence, he is giving a qualified or disclaimer, give the reasons. Maybe the reason is the management has stopped us from getting the external confirmation from all the debtors. Management has not provided us with the addresses of all the debtors. Management has not done the physical verification, so we are not able to attend that. So what is the reason, right? And it says that when the auditor is giving an adverse or qualified opinion. Now, let me just take you through the basis of opinion paragraph that we did earlier. And what was the fourth point? Quickly tell me. Quickly tell me, when we were doing basis of opinion paragraph with respect to unmodified opinion, what was the fourth point? So the fourth point was, this is SS 700, state that the auditor believes that audit evidence the auditor has obtained is sufficient and appropriate to provide the basis for auditor's opinion. So if it is qualified opinion, you will say auditor's qualified opinion. If it is adverse opinion, you will say auditor's adverse opinion. So rectify that. Clear? I marked this as important at that time also, and I told you this will get changed when we'll be doing modified opinion. So now he'll write here qualified or adverse words. Simple. Opinion, basically the word opinion will be replaced by the type of opinion, that is qualified opinion or your what? Adverse opinion. This will not come in disclaimer. Now why? Because there too we are not able to obtain sufficient appropriate audit evidence. Clear? So basis of opinion is done. Now, this is with respect to disclaimer. Now, let us see all this will be covered here also. So let me just take you through this. Now, when the auditor is disclaiming an opinion, when the auditor is disclaiming his opinion, what all changes will be done to the auditor's responsibility? This question came for 3 marks in your July 21 attempt. Right? So it says, See, if you remember, we have done auditor's responsibility, 3 sections, objective, then professional skepticism and all the essays, then communication. So when an auditor is disclaiming the opinion, all those sections will not come. Instead of that, what will come? First of all, auditor will say, auditor will not write that our objective is to obtain reasonable assurance that material misstatement is there or not, and what is reasonable assurance? No. SC 705 says simply write the following, include only the following, only. So all those 3 sections will not come. A statement that the auditor's responsibility is to conduct an audit of the entity's financial statement in accordance with SA and to issue an auditor's report. So this was our responsibility. A statement that because of the matter described in basis of disclaimer opinion section, the auditor was not able to obtain sufficient appropriate audit evidence to provide a basis of audit opinion on the financial statement, and a statement that auditor independence and ethical requirements are met. Right? So SA 705 says when the auditor is disclaiming an opinion, don't write all those 3 sections which are given in SA 700. But write only these 3 points, because the user of the financial statement will see now the auditor is disclaiming the opinion. He's not taking the responsibility for the work, for the financial statement. So what is the responsibility of the auditor? So it is saying that the responsibility was to conduct. But because of the significance of the matter, we were unable to describe, though we were independent and our ethical requirements were met. Clear? Clear. And last but not the least, it says that when the auditor is disclaiming an opinion, he will not mention the key audit matter as per SA 701. What is this? I'll be discussing this when we will be discussing the key audit matters. And today I'll discuss the key audit matters. So one more point is there. See, students, when the auditor is modifying a report, he is giving a qualified adverse or disclaimer. So before doing that, what is the reason of such modification? What wordings you are going to add in your report? Just discuss all this with those charged with governance first. So it is the responsibility of the auditor. If you remember, when we were discussing auditor's responsibility, the 3rd section had, as per SA 260, communication to those charged with governance. So before giving our report, the reasons, the wordings, we need to discuss them with those charged with governance. And with this, we have completed our SA 700 and 705. I will give you a brief about SA 701. But before that, I will take you through, I'll just revise quickly SA 700 and 705. Let me just have a look at your queries and please tell me whether you are able to understand. See, your understanding will increase as and when you will go through the entire chapter in entirety, including the illustrations, including the example, including the whatever is given in the boxes, including the illustrative audit reports. So you need to do that before the next session, which is on Sunday. Let me just have a look at the queries. Sanjay, I hope your query is clear, that how to see whether it is pervasive. Zamil is saying that, ma'am, shouldn't we write that we were engaged with respect to all the modified? No. See, when I am giving an adverse opinion, when I am giving a qualified opinion, the auditor has obtained, the auditor has obtained sufficient appropriate audit evidence, right? And he has performed the audit procedure. He has done the audit. So that is why we have audited. But here in case of disclaimer opinion, he has not been able to obtain the sufficient appropriate audit evidence, and the effect is so material and pervasive that entire statement he is not able to perform the audit procedure. So that is why the wordings, we are engaged to perform the audit. Abhishek, if the time allows, and the time will not allow, so maybe I won't be able to discuss all these things. So let us just quickly go through the module in order to revise, because many of the students are saying to just, we have done all the topics, but putting them together is very important. So I started with essay 700. In fact, I started with this chapter and I told you after this revision will take 5 to 7 minutes. So please don't leave the session. I will be discussing with you essay 701 for the next 10 minutes, right? So we started, uh, we discussed that 700 deals with forming an opinion and reporting on financial statement. 705 deals with the modification. 701 is with respect to what key audit matters, and 706 is emphasis of matter and other matter. Meanwhile, students, please answer whether you are able to understand or not. Okay? So this is the basic premise that management is responsible for preparation for internal control, and the audit will enhance the confidence. And when we are audit, we want to say that they represent a true and fair view. We want to say that they are prepared as per applicable FRF and relevant statutory requirements. Okay? Then the name is divided into two parts: forming an opinion and reporting. So forming an opinion, that means it contains the form and content and the reporting responsibility, and this deals with what? Unmodified opinion. So why this essay? Because it will, in specific headings are given, so it will increase the value of the reporting, because auditor will have to mention that. Then it will increase the understanding of the users, it will increase the credibility, so it will become recognizable, identifiable in global market. Now I think you will be able to understand this more properly. Why? Because when the headings are given, now a person who is having the knowledge that in SC 700 all these headings will come, all that sequence will come, he can immediately see that the audit report is as per the requirement of the essays. The audit has been conducted as per essay. So it becomes recognizable or identifiable. Clear? So what is the objective? I told you to form an opinion, and I told you that this name comes from the name of the essay, and to give a express clearly a written report. How to learn this? The opinion is formed based on what? Evaluation of conclusions, and conclusions are drawn from what? Audit evidences. Now, when the auditor is given an unmodified opinion, what is the definition of unmodified opinion? The definition is that when the auditor shall form an opinion that whether the financial statements are prepared in non-material respect in accordance with the applicable FRF, he'll obtain what? A reasonable assurance that the financial statement are free from material misstatement. You have done this in essay 200. The conclusion is dependent upon what? Sufficient appropriate audit evidence, the uncorrected misstatements, whether these are material individually or in aggregate, and the evaluations. Evaluations of what? Evaluation of the whether FRF, applicable FRF have been complied with, and that will include the qualitative aspect of entities accounting practices. We will discuss with those charged with governance. We will see management judgment. We will see corrective selection. I'm taking just the keywords. We will become aware of possible bias in management judgment, whether there is lack of neutrality, and then the possible bias and accounting estimates are audited as per terms of essay 540. Then what are the specific evaluations? Important question. And these are what? Accounting policy properly disclosed, consistent, whether the estimates are reasonable, whether the information is RRCU, relevant, reliable, comparable, understandable, with adequate disclosure with respect to the effect of the material transaction, and whether the terminology is good, is correct or not, right? The definition: what are general purpose financial statement which are prepared as per general purpose framework. What is general purpose framework? A financial reporting framework. Framework is what? Your standards and all. Financial reporting is when you are accounting, when you are preparing accounts, presenting them. So which meets the needs of the wide range of common needs of the wide range of users. It may be fair presentation and compliance. Both the framework requires the compliance that the company needs to comply. But in case of fair presentation, there is a flexibility that is acknowledges. Now, for all those who say, ma'am, is it necessary to learn this word? See, this is not a jargon. This is a simple word, acknowledges. The dictionary meaning is allows. So it allows that you may depart or you may give some extra disclosures as are required. So auditor will see in case of fair presentation whether overall presentation structure and content is correct or not, and whether the financial statement and related notes give a true and fair achieves a fair presentation. Then what is unmodified we have seen, and now what is modified. See, if the auditor concludes that based on the audit evidence obtained, the financial statement as a whole are not free from material misstatement, and secondly, is unable to obtain, or he is unable to obtain appropriate audit evidence to conclude that the financial statement as a whole are free from material misstatement, he shall modify the report in accordance with SA 705. And with respect to the second part of the name, which is reporting on the financial statement, we saw it should be in writing. The use of specific heading should be done. And what are the headings? Title, Independent Auditor's Report. The word independent here is very important. Addressees, to whom you are addressing. Then auditor's opinion. First is introduction. See, state that financial statement have been audited. This will not come with respect to disclaimer. And the financial statement, the date, the title, and you will state that summary of significant accounting policies. Then you will give an opinion. And what is the language? That in our opinion, the accompanying financial statement present fairly in all material respect as per applicable FRF, that is your AS or Ind AS or whatever is applicable, or they give a true and fair view, and both these can be used. These are equivalent. However, subject to, with the foregoing explanation, these wordings should not be used. Okay? Then, just a minute. Just a minute. I'll have to share the file again. Students, you can, Sanjay, you can search for the report. You will definitely get adverse report. Sanjay is asking, ma'am, is any adverse report available on public domains? Yes, you can search for them. So where were we? I was talking about the, just a minute. So we were here. Opinion paragraph. First will be what? Your first will be introduction, then the opinion will come, and we have seen the language. This has been done. Basis of opinion. First of all, we will state that we have done this in accordance with SA. Then we'll say that auditor's responsibility section is there. Then we'll say we are independent, and here we are saying that we believe that we have obtained audit evidence for the auditor's opinion. When qualified adverse will come, this opinion will be replaced by qualified or adverse. Students, do read the illustrations and examples. Going concern, I'll be doing later. Key audit matters I'll be doing later. Then management responsibility, that for preparation of financial statement for internal control and assessing the going concern. The management responsible. In case there is a change in management, those who signed the terms in terms of SS 210, now they have changed, then obtain a separate written representation from the new management. Right? And then auditor's responsibility is divided into three parts. Firstly, we are saying what is the objective. We know it is reasonable assurance that financial statements are free from material misstatement and to give an opinion, to give a report. Now it says explain these two terms also. Then auditor will say we applied professional skepticism, professional judgment, we identified and assessed, we had designed and performed further audit procedures. Then we have obtained audit evidence, 240 fraud, 143 3 subsection clause 1 is with respect to what? Your internal financial control, your accounting estimates. Then your 570, and then if it is in accordance with fair presentation, then to auditor's responsibility is what? To evaluate the overall presentation structure and content and to see that it achieves fair presentation. With respect to 600, that is in case of group audit where the branches components are audited by whom? By the other auditors. Then the responsibility of the auditor will also come here. Then third section will say we are responsible to communicate, state that auditor communicates with those charged with governance. What all planned scope and timing of audit and significant audit findings. Then the significant deficiencies in internal control. In case of listed companies, the ethical requirements and independence. In case of listed company, SA 701 key audit matters. Students, I have highlighted, I have underlined using this green pen all the keywords. So this is the way you need to learn. Or location is very simple, and it is also very important. It can come as a direct question. I told you it came in true and false for 2 marks this time. So it can be within the body or as an appendix or a reference to the website. Then with respect to report on other legal responsibility, it says form 2 section, report on financial statement, and then report on other legal regulatory requirements. And it can be requirement to report under CARO, requirement to report with respect to internal financial controls, requirement to control to report as in terms of section 143 subsection 3. So signatures, place and date is easy, and date should not be before the date when you obtained the audit evidence. Okay. So, and this, it says that in case you are you are required to report as per any law or regulation, then whether the auditor can mention that it has been done on the basis of essay, if a minimum format A to M points, that whether if all these points are present, then auditor can make a reference to the essays. And with this, we have done essay 700. I request you all again to go through this report, which is given as an illustration in your book. Okay, it will clear all your doubts. See, whenever you just read the opinion paragraph, read the corresponding opinion paragraph in the auditor's report, you will get clarity. Okay? I will not start with essay 701, time will not permit us, but yes, I'll revise essay 705. So it says that when the auditor was forming an opinion in terms of essay 700 and he feels that modification is necessary, auditor will modify the opinion. So what it can be qualified, adverse or disclaimer. So what are the circumstances when the auditor concludes that based on the audit evidence obtained, the financial statement are not free from material misstatement, or he is unable to obtain the sufficient appropriate audit evidence with respect to what? That financial statement are free from material misstatement. So what is the objective? To express clearly through a appropriately modified opinion. What can be the types of opinion? Qualified, adverse, disclaimer. So when will auditor give qualified? When he has obtained the audit evidence and he concludes that the misstatement is individually or in aggregate are material but not pervasive to the financial statement, or when he is unable to obtain and he concludes that the possible effect of the misstatement on this is going to be, could be, see the word uses could be, it could be material but not pervasive. When will adverse give? When along with material it is both pervasive and the auditor is able to obtain sufficient appropriate audit evidence to this effect. What is pervasive we have seen. When will auditor give disclaimer? When he feels that he is unable to obtain but he concludes that it is material as well as pervasive. Okay? So it will get disclaimer of opinion. Now, which type of opinion depends upon materiality and pervasiveness, and this table explains it beautifully. If any limitation is imposed, first of all, ask the management to remove it. If management removes, perform other audit procedure. If management refuses, first of all, talk with those charged with governance, communicate with those charged with governance, and perform alternative procedure. If you're still unable, then if you feel possible, effective, only material and not pervasive, give qualified. If you feel they are material and pervasive, either withdraw if law permits or disclaim. And before doing anything, you need to discuss with those charged with governance. The opinion word will be replaced by adverse opinion, qualified or disclaimer, whatever is the appropriate. And in qualified, you will say except for the matter which are described in basis of qualified opinion, rest all things represent true and fair view. Adverse opinion, you will say because of the significance of matter which is described in basis of adverse opinion paragraph, the financial statement do not represent a true and fair view. And disclaimer, you are going to say three things: that we are not expressing an opinion. Why? Because of the significance of the matter described in basis of opinion, we are not able to obtain. And here we will not write we have audited, we are going to write we were engaged to audit the financial statement. Why? Because we were engaged and we are unable to do that. Why? Because we are unable to obtain the sufficient appropriate audit evidence. The heading of basis of opinion will be replaced by what? Basis of. Now instead of basis of opinion, either qualified, adverse or disclaimer will come, and you will include a description. And this is simple, that script you will quantify it. If it is not possible, you state that. If any disclosure is wrongly written, then you will state that. If any non-disclosure is there, first of all discuss with those charged with governance, then describe that. And if law permit, what is the omitted disclosure, give it. If you are giving qualified or disclaimer, what is the reason? Management did not allow us to say verify the cash, and it was very material and pervasive. And if you are giving qualified and adverse, then don't say that we have obtained sufficient appropriate audit evidence for auditor's opinion. Say we have obtained sufficient appropriate audit evidence for auditor's qualified opinion or auditor's adverse opinion. And see, I have discussed this with you now. If you'll read this, and after this read the above paragraph, you will be able to understand that. So this paragraph is also your homework. So it says that in the auditor's responsibility, do not write those 3 sections, just write these 3 lines, that it was our responsibility to conduct the audit. However, because of the significance, we are unable, and we are independent and ethical requirements have been met. So, and communicate whatever are your wordings. See, whatever are your wordings, and whatever you expect to modify, discuss the same with the management, with those charged with governance. So let us just a brief about essay 701, which is key audit matter. Just next 5 minutes. Tell me whether you are able to understand essay 700 and 705, and students, you will get more clarity once you will go through the entire chapter, including the illustrations, including the sample auditor's report that has been given. Okay. Now, essay 701, the name is Communicating Key Audit Matters in the Independent Auditor's Report. So again, the name is what? Communicating Key Audit Matters in the Independent Auditor's Report. So just a minute. I wanted to complete this topic today, but let us just start. So what is this? Communicating key audit matters in the independent auditor report. So the format is of what? Independent auditor's report. So this is also coming from where? From essay 700 only. So I told you that all these essays are interlinked, and after complying with the provisions of all these essays, the auditor will be able to give an appropriate audit report. Okay? So, communicating key audit matters in the independence auditor report. So, I'll just in 5 minutes tell you what is it. See, the auditor communicates various matters with those charged with governance in terms of essay 260, right? Now, when the auditor is communicating, auditor may feel that some of the matters are significant, and auditor may decide to mention them in the auditor's report. This freedom is given by this essay, which is of recent origin, that auditor can mention such significant matters which he feels he has discussed them with whom? Those charged with governance, and he feels that he need to mention them in the report. So it says that the auditor may bring an paragraph with the heading key audit matters. As the name suggests, is what? Key, significant audit matters, but not any matter. The matter which were discussed with those charged with governance. Out of those, if the auditor wants to disclose any of the matter in the auditor report, he is allowed. Such freedom is given in terms of essay 701. The name is Communicating Key Audit Matter in Independent Auditor's Report. So how will auditor do it? Auditor will give a heading Key Audit Matters, and under that he will give subsequent headings, subheadings. For example, when the auditor was identifying and assessing the risk of material misstatement in terms of essay 315, auditor discussed with those charged with governance that, okay, auditor management, those charged with governance, I feel that revenue recognition or related party transactions, they pose a significant, they appear to be a significant risk area. So The auditor discuss with the management as to how they are working on accounting for that revenue, or how they are working with respect to the related party transactions. Now, auditor wants that though I have discussed them with those charged with governance, I want the users to know this. Though my opinion is not modified, I just want to give an additional opinion. So what will he do? He will make a key audit matter. His opinion is not modified on this matter. He's just giving an additional information. And then say subheading revenue recognition. First of all, he'll explain that what is meant by revenue recognition, and then he will write all the audit procedures that he performed. He may write, I evaluated this, we discussed with this management, we appointed experts. He will write all those matters. So this, the auditor is not modifying his opinion on this matter. This is what? An additional information. And any matter will become key audit matter? No. The matters which have been discussed with those charged with governance in terms of SA 260, and auditor feels that I want to disclose them in the financial in the audit report. The users should, this is significant for the users. So he may do that by following the provisions of SA 701, which is communicating key audit matters in the independent auditor's report. And it is not a modification. He's not modifying the opinion. He is just giving an additional information. So my 5 minutes are over. So I'll be taking up this essay in the next session. And next session, I'll be taking up essay 701, essay 706 and 710 and the questions. So the next session is also going to be very important. But before coming for the next session, please go through the entire chapter till page number 11, till page number 11.41 we have done in entirety. We have not even left a single topic. And please do read the illustrations. Do go through the auditor's report. An illustrative auditor's report has been given. Everything will be crystal clear to you once you give a reading with concentration, right? So thank you for a patience listening, and I hoping that everything is clear with respect to SC 700, 705, and a little bit discussion that we have done with respect to SA 701. So with this, we end our today's sessions, and have a good night. Thank you.